This is Nightly Business Report with Bill Griffith and Sue Herrera.
Trade optimism. Talks between the U.S. and China resume tomorrow. The stakes are high, the relationship complicated, but stocks rise on hopes progress will be made.
Losing its edge, the U.S. is less competitive than it was a year ago after Singapore knocks it out of the top spot.
Frozen pensions, what you should know if your employer changes the terms of your retirement plan. Those stories and much more tonight on Nightly Business Report for Wednesday, October 9th.
And we do bid you a good evening, everybody, and welcome. So on the eve of the critical trade talks, there was muted optimism on Wall Street today amid more mixed signals. First thing this morning, there were reports that China was open to reaching at least a partial deal. But late today, there were additional reports that even those expectations were being lowered by Chinese officials. Investors lately have been getting used to such mixed messages, but clearly anytime there's even a hint of a potential truce in tensions between the world's two largest economies, stocks rise. And that's what happened today. The Dow Industrial Average rose 181 points. We're at 26,346. NASDAQ gained 79. The S&P was up 26. Kayla Tausche tells us what to expect when the two sides meet tomorrow.
For the first time since May, the U.S. Trade Representative and Treasury Secretary will receive China's Vice Premier on their home turf to continue negotiations for a 13th round as the trade war drags on. Reuters reporting expectations from China for a deal are low after U.S. banned business with 8 Chinese tech giants. Here's how President Trump responded to that.
I think they feel that I'm driving a tough bargain, but I have to.
In earlier reports, Chinese officials suggested they're still open to a partial deal and are willing to buy more soybeans from U.S. farmers after pausing purchases this year. That potential sent soybean prices soaring. The administration has previously said that's not enough. But a truce would bring a welcome calm, says one former White House negotiator.
I think it's a way that the president can essentially have his cake and eat it too. He can say, look, I made progress on some real significant things, but I'm still tougher than anyone else has ever been with $250 billion in tariffs in place.
The specter of tariffs rising next week is just one of many pressure points both Beijing and Washington have added in the days leading up to talks to try to get more concessions. Both sides have announced new visa restrictions. Economists, though, doubt China will back down.
What's not there is support for them to stop supporting their state-owned companies, which is basically their welfare system, or to shut down their new technology efforts.
The principals begin those negotiations Thursday morning and extend through Friday afternoon. Tariffs on $250 billion in Chinese goods rise to 30% on Tuesday. For Nightly Business Report, I'm Kayla Tausche in Washington.
Investors are always looking for clues as to what the Federal Reserve might do next. But at the last meeting of policymakers, some expressed concern that market expectations may be out of whack with what central bankers plan to deliver. Elon Mui has more.
The minutes of the Federal Reserve's latest meeting show division not just over the September rate cut, but over how to talk about the path of policy going forward. During the meeting, a few officials argued that the market appears to be factoring in more Fed rate cuts than they believe is appropriate. These officials said it could become necessary for the committee to, quote, seek a better alignment of market expectations and policymaker expectations. In addition, several participants urged Fed Chairman Jay Powell to provide more clarity about when this period of recalibration could come to an end. Now, Powell has pointed a couple of times, including during his speech this week, to the late 1990s, when the Fed cut rates multiple times at consecutive meetings, but not for an extended period of time. He's called that experience successful, but said that policy is not on a preset course. Now, on the other hand, a couple of officials have argued for a bigger rate cut of 50 basis points, possibly accompanied by forward guidance that they believe could prevent the U.S. economy from slipping into stagnation. Now, throughout the meeting, there were references to trade tensions and a sort of gnawing concern that the uncertainty that's weighing on business investment and manufacturing could translate into a slowdown in hiring and ultimately hit the consumer. Finally, on the volatility in overnight funding markets, there were staff presentations and official discussion and a broad agreement that there needs to be a decision about the appropriate level of reserves. For Nightly Business Report, I'm Ilan Mui in Washington.
And what it all means is that interest rates are expected to remain low for some time. So how should you be investing in this environment? Eric Marshall's back with us. He's portfolio manager at Hodges Capital in Dallas. And we ask this question all the time, Eric. I mean, especially difficult if you're investing for income. What do you say to people who are trying to make some monthly income in low interest rate environment?
Well, as long as the economy continues to grow, albeit at a slower pace, and we don't have inflation, interest rates are likely to stay down. And we think stocks look very attractive relative to the other alternatives out there right now. If you look at the interest rate on a 10-year Treasury, it's about 1.5% today, compared to the earnings yield on the S&P 500 is a little over 6%. So that tells us that stocks offer a good risk reward if we stay in this low interest rate environment.
And you specifically think that dividend-paying stocks are where investors should be looking. Any particular ones that you like?
Well, for income, certainly. Depending on investors' risk appetite, we like things like, Coca-Cola on the larger cap companies, International Paper, companies that pay dividends that are higher than the yield on the 10-year Treasury look pretty attractive. And you can find investment-grade securities today that do that. On the small cap side, we see opportunities as well.
Yeah, what about small caps? I mean, your feeling is that they're due at some point to outperform the large caps. Or you have to be pretty patient with that, don't you?
You do, and you obviously take more risk with small caps, but small caps have underperformed the broader market by about 13% through the end of the last quarter. And there's only been 3 other times post-World War II where you saw more than a 10% lag in small caps versus the broader market. And in each of those 3 times, we saw the market catch up over the next year. So we think small caps over the next year are likely to catch up with the broader market. And we can find opportunities in things like materials and home builders and certain areas within consumer stocks.
Very good. Eric Marshall with Hodges Capital. Again, thanks for joining us tonight, Eric.
Thank you.
The number of job openings nationwide fell in August. According to the Labor Department, openings now stand at 7 million, which is a 1.5-year low and is the 3rd straight month of declines. But that number still easily exceeds the 5.8 million Americans officially classified as unemployed.
Meanwhile, wholesale inventories increased less than initially estimated back in August. The Commerce Department said today that they rose 0.2%. Which is below the 0.4% previously reported. The report suggests that inventory investment could remain a drag on economic growth in the 3rd quarter.
A legal setback for Johnson & Johnson. Last night, we told you that a Pennsylvania jury awarded a man $8 billion in punitive damages. Investors sent the stock down about 2%, making it the worst performing stock in the Dow today. And though J&J finds itself in court over a number of issues, this particular verdict caught many off guard. Meg Terrell has more for us tonight.
Johnson & Johnson is no stranger to the courtroom. The healthcare giant has been fighting legal battles on multiple fronts, most recently on its talcum powder and opioids businesses. But the news late yesterday was unexpected. A Philadelphia jury said J&J must pay $8 billion in punitive damages in a case involving its antipsychotic drug Risperdal. The damages are to a man who claims J&J downplayed risks that the drug could cause breast growth in boys. He already won $680,000 in a compensatory award. J&J called the award, quote, grossly disproportionate and a clear violation of due process, and said it will move to have it set aside. The sheer size of the jury's award, though, may be a symptom of the public's suspicion of the pharmaceutical industry, says University of Michigan business professor Eric Gordon.
The verdict shows how much we hate pharmaceutical companies. We have gone from thinking of them as the people who provide the diabetes medicine and heart pills that keep our grandmothers alive, to the people who are gouging us with prices, lying to us about safety problems.
The drug industry is now the least popular in the United States, this year unseating the federal government as most hated in a Gallup poll.
they've gone from being heroes to being bums in the eyes of a lot of us, including jurors.
For J&J, more litigation is on the horizon. Another Risperdal trial is set to begin in Philadelphia in December, while there's an ongoing trial in the health giant's home state of New Jersey concerning its talcum powder and ovarian cancer. And beyond that, J&J is still named in more than 2,000 opioid lawsuits. The company just reached a settlement to avoid the first federal opioid trial, set to begin later this month in Ohio. It paid $20 million to 2 counties. That's after a $572 million loss in an opioid trial in the state of Oklahoma. Some of its talc verdicts have been larger, including one for $4.7 billion last year. The company is appealing the cases it's lost. And while Wall Street analysts generally shrugged off the $8 billion verdict, saying it's very likely to be overturned, investors wiped more than 2% from J&J's stock price. That amounts to more than $8 billion in market value. For Nightly Business Report, I'm Meg Terrell.
Time to take a look now at some of today's upgrades and downgrades. We begin with shares of Roku. They were upgraded to outperform from neutral at Macquarie today. The analyst there sees growth opportunities for the company in connected TVs, in advertising, and expansion overseas. Price target now $130. Shares of Roku rose 9% today to $117.79. Chipotle was upgraded to hold from underperform at Gordon Haskett. The analyst cited the company's push into digital ordering and said that the bear case on that stock right now is increasingly untenable. His quote, price target $740. That stock gained more than 2.5% today to $827.29.
FedEx was downgraded to market perform from outperform at Bernstein. The analyst says results could get worse before they get better. The price target is $153. Shares rose a fraction to $139.25. Coverage of Peloton was initiated with an outperform rating at Baird. The analyst says the company has created a better fitness model and sees a sizable potential market. The price target is $28. The stock was up more than 3% to 24 even.
Still ahead, more companies are freezing pensions and leaving workers with some often confusing sounding choices.
American Airlines has pulled Boeing 737 MAX from its schedule until mid-January. That date is later than any other airline. Regulators have not said when they will allow airlines to operate that jet again. The airplane has been grounded since mid-March and has forced carriers to cancel thousands of flights, driving up their costs.
Thousands of Northern California residents stand to lose power over the next several days. PG&E has begun cutting electricity to areas where wildfire threats are high. The bankrupt utility says that up to 800,000 customers will be affected, including parts of Napa. Classes today were canceled at the University of California, Berkeley, as well as at other schools. Area airports and transit systems say they will not be affected. And by the way, late tonight, a new development. Shares of PG&E fell sharply after a judge opened the door to a rival bankruptcy plan.
Singapore has knocked the U.S. out of the top spot as the world's most competitive economy. That's according to the World Economic Forum's annual competitiveness report. The United States, the world's largest economy, is down to second place this year. So does this mean that the U.S. is losing its competitive edge? We're joined now by Michael Yoshikami. He is founder and CEO of Destination Wealth Management. Good to see you again, Michael. Welcome back.
Hi, Sue.
You do not think it means that the U.S. is losing its competitiveness. Why?
Well, first of all, if you've been in Silicon Valley, the degree of creativity and innovation that still exists in that location is pretty incredible. Let me tell you also something about Singapore. I used to be a college professor in an MBA program in Singapore, and that college offered innovation and technology creativity classes for executives all around Asia that would fly into Singapore as I was the instructor. And you know what they were there to learn to do? To be able to be as creative as the United States. So I think in the end, yes, I think certainly Singapore, Vietnam are catching up. but I still think the United States is number one.
But it begs the question, though, do you look elsewhere in the world for investment opportunities if there are aggressive countries that are working to increase their competitive edge against the United States?
The answer is yes. I think you do expand your reach outside of just the United States. You certainly, in terms of creativity and innovation, even though there are issues related to China, obviously now, you do have other areas in Asia, as I mentioned, in Singapore and Vietnam, I think that are compelling opportunities. But again, I think it's really a matter of scale. Do you put most of your money in those type of markets or most of your money in the creativity that exists in the United States? And I vote for the United States.
Where would you be looking for that opportunity from an investment standpoint? And how much would you allocate to some of those other countries?
Well, I think that you want to look at, obviously, the growth areas, artificial intelligence, which is not only autonomous driving, but also what people are starting to be able to do with their phones. I had an opportunity the other day with Amazon to ask customer service a question, expecting a person to chat with me, and it was an automated chat response, which was really just as effective, actually, as chatting with a person. So I think you want to look at companies that are really expanding, focused on innovation. And Apple is theoretically going to come out with smart glasses next year. And then you want to look and see what's happening in Singapore, Vietnam. Remember, these countries, Vietnam is more about manufacturing. Singapore is where there's a lot of VC activity, so there's opportunities there as well.
Venture capital, yes, indeed. Michael, thank you very much.
All right,
Michael
thanks,
Yoshikami with Destination Wealth Management.
FireEye's revenue looks red hot. That's where we begin tonight's market focus. The cybersecurity company says that its revenue is going to come in at the high end of its forecasted range when it reports earnings later this month. And separately, FireEye introduced new cloud security products that will be available on Amazon's web services marketplace. Shares were up about 5% to $14.53 today. Fitbit is shifting its manufacturing operations out of China to avoid tariffs. The wearable device maker says that starting in January, none of its trackers and smartwatches will be made in China. Shares were unchanged today at $3.69. And AT&T is selling its businesses in Puerto Rico and the U.S. Virgin Islands to Liberty Latin America. It's a deal worth nearly $2 billion. That move allows AT&T to pay down some of its debt, and shares rose a fraction today to $37.05.
Insurer James River Group is canceling its auto policies with an Uber subsidiary. That subsidiary handles and processes payments to Uber drivers and is James River's largest customer. The insurer's CEO said the account did not meet profit expectations. Shares plummeted more than 22% to $37.88. Some changes at U.S. Steel. The company said it plans to cut about $200 million of fixed costs by the year 2022. It also named a new chief financial officer. The shares dropped more than 8.5% to finish at $10.09. And after the bell, Costco said comparable store sales for this month were up more than 5% from a year ago. Shares were relatively unchanged in initial after-hours trading, but they closed the regular session up nearly 2% to $296.90. Also after the bell, Bed Bath & Beyond said that it hired Target's chief merchandising officer, Mark Triton, as its new president and CEO, which takes effect next month. Shares initially rose in after-hours trading, but they closed the regular session down a fraction at $9.94.
Pensions, once the holy grail of a secure retirement, are quickly becoming a thing of the past. Forbes magazine estimates that only 16% of Fortune 500 companies offer a pension to new hires. 20 years ago, roughly 60% did. And just this week, General Electric froze pension benefits for roughly 20,000 of its salaried workers, and it plans to offer lump sums to 100,000 former employees who have yet to start receiving their pension benefits, all to reduce its debt and future obligations. But in the meantime, it can be all very confusing for individual workers when it comes to making that important decision about how to take those benefits. Joining us with some advice, Marguerite Chang is the CEO of Blue Ocean Global Wealth. Marguerite, thanks for joining us tonight.
Thank you so much for having me.
Often it comes down to lump sum now or the income stream in the future. And for you, it's not a clear-cut answer. There's no right or wrong, right?
Correct. I mean, it depends on the situation, but there are times in which you would want to choose one option over the other.
And it has to do with your age, for example, where you are, and how much you would be receiving.
That is correct. So if you are 65 and getting ready to retire, you will be collecting your pension benefit soon as opposed to later. So you may feel more comfortable taking that income stream. If you're 45, you may say, you know what, I'm going to just take the lump sum. I think that I can invest better.
You also say evaluate the payout options, and specifically, you have a formula with the payout option and the insurance and what's covered.
Absolutely. So another consideration is if your pension is larger than the annual amount that the Pension Benefit Guaranty Corporation insures, you may very well want to take the money and invest it for yourself. The other option is when you are presented with this decision, you want to ask what your payout options are. So here's what I mean. What amount would you receive lump sum? And then if you decide that you want to collect a pension in the future, what amount you would receive for your life, and then maybe 20 years certain. It's also important to ask what your loved ones would receive as well.
We should point out the amount that the PBGC, the Guarantee Corporation of the government, the amount that is insured is about, what, $5,600 a month. They're about $67,000 a year, right?
That is correct.
So if the amount you would be receiving each month in that payout is less than that, then you're in pretty good shape then, right?
Correct. I mean, when your pension is frozen, it means that the benefit will no longer grow, but it is still going to be insured by PBGC. The question to take the lump sum or receive income stream, it's very personal based on your unique circumstances.
You also point out on benefits, you have to make sure who is covered if you pass, and are they covered, depending on the situation of the company and why it froze the pensions.
That's correct. So it's important to find out what your benefits are for you as well as your loved ones.
And what are the tax implications in all of this? Is that a consideration?
Absolutely. So if you decide that you want to take the lump sum, it's best to roll that over to an IRA so that you're not taxed on the full amount. You would only be taxed on when you start to receive the amount.
All right. Seminar is over. Marguerite Chang with Blue Ocean Global Wealth. Again, thanks for joining us tonight.
Thank you.
Coming up, Vision Quest, a high-tech way to keep your eye on the ball. Facebook's CEO is now scheduled to testify before the House Financial Services Committee on October 23rd. Mark Zuckerberg will be the sole witness at the hearing, which will focus on the company's digital currency project called Libra. Lawmakers want to know more about Libra's potential impact on financial services and the housing sector.
Activision Blizzard's new game Call of Duty Mobile has become the biggest mobile game launch ever. According to a data analytics firm, the game has seen more than 100 million downloads since going live at the beginning of October. The game is initially free to play, but it comes with those in-app purchases that have become popular. The number of downloads topped the previous record holders, Nintendo's Mario Kart Tour and Pokemon Go.
October baseball is here. The World Series is just around the corner, but it's also the time of year when young prospects work hard to improve their game. For some, that includes using a high-tech vision test that aims to find the best players and improve the ones that need help. Eric Chemi takes the swing for us.
A portable computer with infrared eye tracking cameras is changing the game.
Now we're just going to calibrate your eyes.
RightEye is the standard for baseball's prospect development pipeline, a program to evaluate amateur players. A 5-minute series of visual tests requires users to focus on specific spots, track quickly moving targets, and make rapid decisions based on random visual actions. A report is generated immediately that evaluates eye tracking speed and accuracy, hand-eye reaction time, and eye stability. More than 4,000 elite baseball prospects have been tested to date, and the results help doctors prescribe eye exercises to improve player performance.
It actually is such a great asset for a player because
If you can find out that when you look to the left, maybe one eye is just a little bit over, and that slows you down over here just 10 milliseconds. But it's the difference between you being able to bat against a right-handed pitcher over here and a left-handed pitcher over here. You're going to want to improve it.
But the applications go further than just baseball and even other pro sports. Esports is a rapidly growing use case, as is healthcare, where vision testing can find evidence of brain trauma, like concussions or strokes. Right Eye can also help zero in on learning disabilities. That's one of the reasons vision insurance provider VSP is a major investor in the company, which has raised more than $12 million since its launch 5 years ago. Right Eye is also exploring big data applications.
If you think about what we really have, in addition to the tests, we have 200,000 people who have taken the same test, and we know that Alzheimer's, that MS, that ADHD, that dyslexia are all ultimately something that can be diagnosed or at least monitored by eye tracking technology.
One machine can cost up to $15,000, with around $5,000 additional per year for annual fees and training exercises. For Nightly Business Report, I'm Eric Chummy.
And before we go, a final look of the day on Wall Street ahead of the trade talks tomorrow. The Dow rose 181 points. NASDAQ gained 79. The S&P was up 26.
And that is Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. See you tomorrow.